A big welcome to my free course, the Investment Accelerator. What I'm doing here is actually, my mission overall is to onboard more people to take advantage of market cycles, to fight inflation, to learn cryptocurrencies, what is meant to be for censorship resistancy, no middleman, no counterparty risk, and peer-to-peer transactions. So if you're excited for that, I'm telling you, you have a huge upside potential to make more money out of your hard worked coins you made in your real life. So let's get straight into it. Again, welcome. So the best timeline to learn that skill about reading charts and to get started with Bitcoin, Ethereum, cryptocurrencies overall is now. Right now, it's the best time. It's August 2023. And we have the Bitcoin halving in April 2024. And the forecast for the new bull cycle will occur 2024 till 2025, where we're going to reach a new all-time high. So this is a money grab, and it was never easier to make more out of your money. The proof of the future anticipation is here. As you see here, the red lines, they represent the halvings. And I'm telling you, always, previously, of the last 13 years, this technology is around, we had a massive run to the upside. Over there, we had a nice pump to the upside. The returns overall are diminishing, but you can still make a lot of money here. So again, the best time to learn now and to adapt. If you're here and you start investing, and you take your time to understand everything, to get ready to go till April 2024, it's your time. And then afterwards, you got to follow me on my YouTube, and of course, we will see together what is the best strategy to take our profits. We want to escape the noise. We want to escape the matrix. And one thing we don't want to suffer as I had to suffer in the last previous bull markets. And that's why I'm here, because I want to save you from that. Again, before we get into the charts, this is like the psychology of the market cycles. So you really need to understand that. And right now, we're probably here in the hope stage, disbelief hope stage. So soon the bull market will occur. A bull market means the prices go up over there, up to euphoria. Euphoria, and in the thrill stage, we want to sell our tokens for the people who do not do their due diligence, who actually believe the mainstream media narrative, and we do not do that. And then over here is a new bear market, and I always gonna be with you to do mindful decisions to make the best out of your investments. I gotta give the disclaimer though, and that's very important for me to make you understand everything you learn here is due to your own diligence. You can cross-check a lot of information as well, but you gotta remember, especially here, focus on cryptocurrencies, and cryptocurrencies are highly volatile. They might drop over 95% in value. However, they're also the best performing asset of our generation. If you decide to acquire cryptocurrencies, ensure that you conduct proper due diligence and risk management. Okay? Never invest more money you afford to lose. And don't blame me for that. I'm just here to give you my wisdom and my experiences so you can make easy money and have a better future. So remember to be responsible for all the actions you take. And now let's get into the course and have a lot of fun. Thank you. Welcome to the course to learn how to actually get into charts and to get a better understanding. We're here on charts.cointrader.pro. So this is an alternative to TradingView, for example. TradingView is subscription based and costs a bit of money. So if you come here the first time on this chart viewer, you're going to be a bit irritated most likely because you do not know really what is going on. You have all different cryptocurrencies here, but this is completely for free. So I will recommend what you do. You actually go here and you type in BTC, because this is the chart we're going to take to learn. And we go on the Bitcoin USD chart. And now it should actually just pop up. And it's going to give us right now the chart. And you see we have like green colors and red colors in here. And this here, that D stays or represents 1 day. So what does that mean particularly? If I zoom in now, okay, you see those candlesticks, and each candle represents 1 day. So I recommend to do now, for example, to go here on the weekly. I want to train you to become an investor. And as an investor, you need to zoom out and you're not gotta be greedy. So actually, you don't need to check candles as the 5-minute, the 15-minute, or the 30-minute chart. This is people who do like scalp trading, or you do not need to actually use the 1 hour, 2 hour, or 4 hour chart. Not really, it's not really that important, okay? So I would recommend you go here on the weekly and then you zoom out and you see obviously the price action, and Bitcoin actually launched back in 2009. So the record here on charts.cointrader.pro starts in 2013. So obviously when things go up, the prices go up. And one Bitcoin is basically here against the USD dollar. So one Bitcoin here, for example, at that top would give you $19,472. Over here, it will give you $67,000. And obviously, you got the vertical here for the price, and linear, you got here the timeline. So it should be very easy to follow up, obviously 2015 to 2027, but we're here right now, always obviously in 2023. So I hope, first of all, that kind of made sense to you. So again, I need to get back into the candles. And very, very important is to understand the differentiations between the green candles and the red candles. The green candle means the price started the next up following week at a higher price. So this is actually bullish in trading terms or investment terms. And vice versa, if it's red, that means the following week the price actually started lower and more people sold Bitcoin than actually bought it. So this is the first lesson, just to get an understanding about the candles, the colors, and the time frames. And just to finish this off, very, very important as well is you always got to go here on the logarithmic, okay? Because right now this is linear and it does not really show us the true appreciation of an asset class. In that term here, it's Bitcoin. So we go here on log and then we zoom out. Okay, actually, we zoom in, I'm sorry, and you will see it's actually going up from the left to the right. And here we see the true price appreciation. See you in the next video, and I hope that already made sense. Now what we gotta do, I'm just gonna show you basically how you can measure the price appreciation and depreciation. And this will be a very quick video. So basically what you do, you go here on the left hand side and then you click on that and you go for long position, and then you can go here for bottom, and then you can, oh, let me go back here. I'm sorry, I actually choose the wrong one. You go here on price range. And then you go here, for example, on a bottom. A bottom is obviously here where you see the linear line, where you see a bottom, another top. This is a bottom, this is a bottom, this is another bottom, this is another bottom, this is another bottom. I hope you could follow the line, and here is the last bottom actually. So what you can do to measure the bottom to the top in one cycle is that you go here, for example, and then you go all the way to that top. And now you see this is 1,433%. So you actually just got to go 2 digits back, and it's going to tell you how much fold this price appreciated. So here it's 14-fold. And then you can just do that again over here and go to the price range, and you go to that bottom, and then you go all the way up. And then you see here, okay, wow, this is 2 digits back, 106-fold. Okay, so $1 would have made $106. And then you can just rinse and repeat, and you go here from that bottom to the top and whatsoever. So you get it. And vice versa, to see the depreciation, you go here again, and then you go on price range. And then you're just gonna go here to the top, and you scroll down to the current price. What is that red line? And you see, okay, minus 61%. And then, of course, you can play with it and do with it whatever you want, but it's really, really good to analyze prices and markets and price structure and price action. You can go here and you can really go to the bottom of the bottom over there, what is 99%. If the price would dump that much, the price dumps would mean, of course, the price goes down and people just selling it like crazy. I hope that it was helpful, and I'll see you in the next one. I'm just going to show you how you can actually check out the time frame. So you go here again on the weekly chart. You can go here as well on the daily or on the hourly or whatsoever. So one candlestick again represents that time frame you decide. And then you can go here, and instead of going on price range, you go on date range. So if you want to see how long did it took from the 24th of June to where it reached the top over here, and you have always the vertical and the linear line, the horizontal one, what gives you accurate data points that you can see, okay, over here it's 231 bars, what represents 231 weeks, what equals 1,617 days. So you can do that all the way, and you can stretch it, and you can of course add as many data points as you please. And like that, you can basically get historical information and then adapt that to the future action of an asset as Bitcoin. I hope that makes sense, and I'll see you in the next one. Alright guys, so in this video I just want to show you the indicators you do need to know or understand at least the basics from. So it's very important to just listen up quickly to it, and it's very simple, and we gotta keep it simple and stupid. The most courses and the most people that tell you so much stuff about different indicators, and I think you gotta really keep it simple. So what we gotta do, we're going up here and we go for indicators, and then we go for moving averages and a double. So we get now two moving averages, and then it's important to click here on the settings, and then we got, let's say, one color red, this will be the 200 moving average, and then the other one we do green, and it's going to be the 50 moving average. So we got to go here on inputs, and then we got to go here for 200 and here for 50, and then we just click OK. And now we have the 200 moving average and the 50 moving average here. What shows us on the chart that things are bullish or bearish. So usually, and this is now easier to see if we go on the daily time frame, is that you want to be in a bull cycle always above those averages. So you see here that bull market, we over the 200 moving average very closely. Here right now you see we tapping below the 200 moving average. So to have a future perspective of a more bullish market cycle, we actually gotta build a trend above that red line, that 200 moving average, including of course being above the 50 moving average. So just to be bullish or bearish, it gives you an indication that you have to be above those indicators. So just follow those steps the way I did it. You can of course always do screenshots or replay the video, and that will help you to have the right moving averages in place. Thanks for listening, and I'll see you in the next one. This is another quick session about the RSI, the Relative Strength Index. I'm just going to show you how you can deploy the RSI. And this is very simple. We just go here and then we go for RSI, Relative Strength Index. Basically, this indicator shows us if the price is overvalued or undervalued. So if you see, now here is the RSI. So it's really important to have that in check. Again, I'm here on the weekly, and again, I tell you, I'm an investor. I'm not really a day trader or a swing trader or a scalp trader whatsoever. So you want to make sure that you basically, if you enter a trade, you're always in that range or underneath it. You don't want to get into overbought territory, because then there's a high possibility that the bears get in and they're going to sell and dump the market. So if I stretch that out a bit, I just want to show you. You see, for example, here, we obviously pretty much overbought. Here's the euphoria stage. One touch point there, and if I scroll down, one touch point here. So imagine you would not see that line over there, what is following afterwards with the price action. You would basically just see that the RSI is pretty much here. So that shows you it's not a good entry and you should not get in. Vice versa though, if you see here, you here on the bottom, this is a great time to actually buy because no one is really in here, and it's a good opportunity to get a fair price for Bitcoin in that example. I hope you enjoyed that and it makes sense, and I'll see you in the next one. You learned about the candles, the green ones, the red ones, the time frames over here you can play with. You learned about the price range here and the date range there, and the indicators like the moving averages and the RSI. I hope you enjoyed that. Everything I say is not financial advice. You do your own due diligence, but I think if you understand those basics, you should replay everything and really manifest it. You will get a better understanding and approach to great profits in the upcoming future. Thanks, and I see you in the next course about how to buy cryptocurrencies.